Good afternoon, good Sunday everyone. I'm filming this on a Sunday after catching up with the market and here to present to you guys the weekly market update. So starting with key news update, starting with the first piece of news, S&P 500 and Nasdaq currently at all-time high or at least near all-time high, largely boosted by AI and earnings optimism. So some of you might be holding stocks, right? And you realize that, oh, market is at an all-time high, but why is my stock barely moving or not moving as much as the market? So the key here to note is actually AI. So AI alone has been propelling the market upwards, pulling it upwards, whereas other sectors like software, jet, airline sector, consumer staple, consumer discretionary, so on and so forth, they are actually lagging the market. So what to do now is actually not to blindly notch into AI because AI and the market by all metrics actually suggest that we are massively overbought. In fact, if I just pull out the chart, so this is the market index. I refer more to the Nasdaq 100. So these are futures, but for the purpose of just seeing how the market is moving, this is a good enough illustration. As you can see that ever since the 30th March lows over here, we actually went on a tear of let's see how many percent is this. We actually went on a close to 30% upward tear. So tell me realistically, guys, how many more upwards candle can you expect to see? In fact, it's very limited, right? And what the market can do now can be a few things, right? It can start chopping here, it can go higher and start to dump on you, so on and so forth, right? So now the key is not to blindly long, right? If you guys want to long, then look for the appropriate sector to long where the valuations is actually still doing okay. And I will delve further into that as well. And also this is also one of the key reasons why in this channel, right, I talk a lot about sector indexes. Right? Because before you actually long a stock, you need to see how the sector is doing. Perhaps it's not really okay to long AI stocks now because it's massively overbought. But you could consider looking at software. There's still further room to run, right? So it's important to note that sector indexes is very important as well. So with regards to the overall market, we are still in greed territory. In my previous video, I mentioned that we should, or rather, I myself personally, I will look to hold until extreme greed and then slowly start to trim, not to short, right? Because this market is really strong. We don't want to risk getting caught up in the wrong side of it. Of course, unless you are like a god trader, then okay, go ahead. You are probably better than me then. Yeah, so we are currently in greed territory. So my take is hold on to existing longs, but you don't blindly long now, right? Don't blindly go to a semiconductor stock and say, okay, semicon has been rallying, I'm gonna long now. No, right? Okay, so just for comparison, this is the Nasdaq 100 chart. We rallied 30%, but if you just look at the semiconductor ETF, you see that the rally here since the lows is even more massive, right? It went up close to 67%. Wow, that's actually insane, right? Just how much further do you think it can go? Like, do you think it can just go up to the moon? I doubt so, right? So the upside is really limited. Don't get me wrong, right? You can still have a few days of plus 10%, but it's really hard to actually make money off such a overextended trend already, right? You might as well you'll be better off looking for value elsewhere, right? So next piece of news, Straits of Hormuz effectively stays shut despite ceasefire, but like I mentioned, equity market just don't care. You see, we are at all-time high. There's no way we are at all-time high if, let's say, the Straits of Hormuz, if the equity market is still pricing for Straits of Hormuz to remain closed, right? Because Straits of Hormuz being closed would essentially spell an energy crisis and rapid inflation for the rest of the world. So no, the equity market now essentially doesn't care. Usually based on my backtesting, you will realize that equity markets is usually right in the sense whereby if they price for Hormuz to open, it will open soon, just a matter of time, and it's in the short term. Okay, so current latest update is I expect US actually sent a peace proposal to Iran. They are now currently expecting Iranian to get back to them soon, and then we'll see how it goes. But essentially, this Straits of Hormuz incident is kind of being priced out by the market already. Next, just few key piece of news, not really super relevant to the market, but I just thought I'd go through them to increase your global macro knowledge, right? Trump announces 3 day ceasefire between Russia and Ukraine. Xi Jinping and Trump is actually meeting in Beijing next week, so interesting to see how the global macro dynamic will portray after this meeting. Next, inflation data is actually coming on next Tuesday, and that, in my opinion, is the next key piece of news that will move the market. Okay, so that's it for key market updates. Okay, moving on to the next segment, I'm going through key macro indicators. So every week, like I mentioned, I'll be going through some of the key macro indicators to basically tell me a sense of how the market is performing, right? So maybe let's start with NAS 100. So essentially, it shows the market index. So like I mentioned, Nasdaq 100, or rather the market, even if I pull out the SPY, you see that we are at all-time high. It's essentially one crazy leg up. How much more room to run? Very limited, right? In fact, the downside risk now is much higher than the potential for it to go up. So that's why I suggest please do not blindly jump into long. You will save a lot of money. Right? If you want to go for longs now, look for value. So I'll delve into which sector specifically we can potentially look for long, but definitely not semicon. Okay? Right? So Nasdaq, we are at all-time high territory. Fear and greed, we are at greed now. Still haven't reached extreme greed. I'm still gonna hold on to my longs. VIX. So last week I mentioned that VIX is approaching support, signaling limited upside to the equities market. Fun fact. Even after a week, the VIX still haven't came down to my level. Right? So that's why you haven't seen any sell-off yet. But I expect when VIX come to this green zone here, which is about $16-ish, that's when you expect the market to actually pull back a little. Not saying it will crash, but at least it will pull back a little. And the incident that caused the market to pull back, I do not know, right? But it could be a multitude of reasons. Perhaps inflation came in hotter than expected. Perhaps the hantavirus start spreading rapidly, like COVID, for example. Or perhaps the Straits of Hormuz, there's some renewed tension with regards to it. Endpoint, I don't know, right? But usually, what you see on the chart, let's say you expect that market VIX to kind of bottom out here and market to crash here, usually some piece of news will come out catalyzing that crash. Or I wouldn't use the word crash, but perhaps pullback is a better word, right? So that's on the market, and I covered VIX as well. Then let's say US 2-year U, 20-year U, not much opinion. DXY, not much opinion. Bitcoin, can talk a little bit about Bitcoin and then Brent crude. That's it for this segment. So let's say we go to the Bitcoin chart, right? So last week I mentioned that Bitcoin will at least hit this zone and face some level of rejection, which it did, right? It tapped this zone and rejected slightly, but this is not the kind of rejection I'm looking for. I'm actually expecting a more major reaction. So I do think that Bitcoin can continue to head higher to actually mitigate further in the zone before you see a sharper pullback, right? But ultimately, my trajectory for Bitcoin is still going up. So perhaps you can see something, it can pull back, then I mean it can go higher, pull back, then maybe chop here for a while, hunt some liquidity, then go up. That's my take. Okay. So after Bitcoin, we can talk slightly about Brent since it has been the key piece of entertainment or key piece of news everyone has been looking about. So Brent rejected off the highs and came back down to demand. If this zone is if this zone actually fell, then Brent would likely have peaked, right? It's still possible that price go up, take out all the highs here and then hunt lower. Then this would mean some form of renewed tension, right? Then a renewed tension then followed by this escalation. Classic playbook in my opinion, right? But I'm not a Brent trader, so I don't really care, right? But for those of you who notice Brent, perhaps this is something you want to watch for. Okay, so watch for a hunt to the upside, take out all the liquidity, and then hunt back down, right? But mind what I say, right? If let's say this zone were to fail, this green zone were to fail, then Brent would officially have topped. Or yep. So that's it for macro indicator.